Hi, it's Nancy. Today I want to talk about the market crash, the real estate market crash of 2021. This is what I'm seeing, and I think it's to get more traffic on their website or their YouTube video site because I don't see a crash coming. Do you? We had the crash in 2008. That was the biggest real estate crash of all time, I think, at least in my lifetime. And boy, did that hurt. And so, what made that happen before that we don't have this situation now? So we don't have no income verification loans. People have to have income. They have to qualify to get their mortgages. We don't have negative amortization loans. We don't have loose credit guidelines. It's pretty tight, actually. You have to qualify, have good credit, have money in the bank, and all those things to get a mortgage, which is a good thing. And the interest rates are very, very low, less than half of what they were back in the day in 2008. What created that crash was partly giving people loans that shouldn't have had them. People building speculatively because when they started construction, by the time the construction was finished, their house would be worth $40,000 to $50,000 more. They could do a quick flip. We don't have that happening now because those people can't get loans. You actually have to have good credit and a job and money in the bank to get a loan. So we don't have that going on. We don't have predatory lending going on. We don't have an oversupply of homes being built, which was being built back then. So now we have what most people are concerned about is the housing prices are going up, and some people think they're peaking. And I got to say, I think the appreciation is going to slow down. We're not going to get 10% a year is not normal, okay? And that's good. It needs to slow down. The appreciation needs to slow down a little bit. But what we do have is a situation where people have a lot of equity in their homes across the country. So before, the other thing is we had people who were using their home equity loans like an ATM machine because they kept thinking there was no end in sight. They could just go get money whenever they wanted to, buy a new car, take a trip, whatever. We don't have that now. People are more conservative because they think our future's uncertain. And our future's always been uncertain. We never know what's going to happen, right? Did we think COVID was going to happen? No. And that has affected a lot of people. Is it going to cause a major recession across the United States or across the world? Certain industries have definitely been affected. You've got the cruise industry, the airline industry, and you've got the restaurant industry, entertainment. Those types of things have really been affected and probably aren't going to recover anytime soon. But corporate jobs or other jobs where people work out of their home, administrative work, those things seem to still be going on, and I don't think COVID has negatively affected those things. But I've got a few experts that I follow in the market because I'm certainly not that much of an expert. I didn't predict the last crash, and I got hurt pretty bad in that. But for right now, probably. Well, the other thing we have is mortgage delinquencies are up. Mortgage delinquencies are up because most companies gave forbearances to people, and a forbearance is where they say, okay, do you need to not make your mortgage payment? We'll give you a year's reprieve, and we'll tack the money onto the back end of your loan. So, and they didn't make people qualify in order to get the forbearance, from what I understand. So, is that going to cause a lot of foreclosures? We don't think so. Are there going to be a few foreclosures? I do think there's going to be some. I also think there's going to be some short sales out there. As a matter of fact, I've seen a few, but I don't think we're going to have anything like what we had before. And I've got one investor that says we are, that I follow, and one investor that says we're not, or he doesn't think so. So it's interesting. But right now I'm going to give you the two investors that I follow. One is Ken McElroy, and he's got a great YouTube channel. And he's very knowledgeable, owns 10,000 units himself. Very, very knowledgeable to learn from him on YouTube. And the other one that thinks and he thinks there's going to be a recession and a housing crisis. The other one is Meet Kevin, and he's a younger man, and he's very smart, and I watch a lot of his YouTube videos too. And so they have completely different opinions based on some of the same statistics that are out there for other investors to follow. It's very interesting, the different outlook of the two of them. So I'm just going to leave you with that. Enjoy them both. And one other YouTube that I want to recommend, YouTube channel, is Bigger Pockets. And Bigger Pockets tells people how to invest in the most easy to understand language I've ever seen. So those three are my favorite YouTube channels for investors, and I hope you enjoy them, and I hope you invest in real estate very soon if you haven't already.